What are some interview questions?
Some interview questions, right. Well, it depends. Look,
what do you like to ask when you were on, on that side? Yeah.
So I'll take a step back for a second versus interview questions, because there's a lot of guys out there on interview questions, and they can go read them. I learned from one of my mentors on how to interview, and he had the CWF, the can do, the will do, and the fit, and he would literally make a little matrix. So the C, can do. Can they do the job? Do they have the intellectual capacity to do the job? I said anybody can do investing. Investment banking is a little different. To get the job in investment banking, you have to be smart. You're working with very smart people. Sometimes very complex transactions. You have to be smart. So can you do the job? That's step one. If you can't do it, then go find something else to do. And the way you demonstrate that is by knowing this stuff up front, knowing how to do the valuation methodologies up front, knowing about the bank that you're interviewing up front. The will do, that's attitude. To go the extra mile, to, if there's any downtime, to ask your staffer or your associate or your VP or whomever, your managing director, if there's anything else you can do. And then the fit. On Wall Street, because you're working a lot of hours and you're working in teams in general, you have to get along with people. So they can have the smarts and the attitude, but if they don't fit, then they probably won't get the job. And so the way I recommend the fit part is to, through the interview process, if you're lucky enough to get several interviews and have several opportunities, to really think about who at the company that you mesh with, who you want to be a mentor to you. And some companies have different cultures. The culture at Goldman Sachs is very different from the culture at Moelis & Company. And where do you fit best?
So learning about those mentors or those people who are there, and thinking whether you would like to work for them and you would be a good fit.
Absolutely.
Even if that person gets hired but he is not that a good fit, the person would suffer also from
it
that.
Could. I mean, typically in the banks you have the opportunity to go into a industry group or a product group, and you have an opportunity through your summer internship to meet a lot of different people at networking events. Like I said, I started my career at A.G. Edwards, and which was not my first choice, but I was very lucky to get the job and work with great people there. And I really wanted to come to New York. I really wanted to do leverage finance, principally because of one of my mentors who worked in high yield many, many years ago. And so the head of leverage finance at Deutsche Bank was an individual named Tom Cole, who was an Indiana alumnus. And one of the senior individuals there, James Paris, was an Indiana alumnus. So I had networked with these individuals over the summer when I had a summer internship in trading, and stayed in touch with them. Ultimately, 6 months after I got my first job, when they were looking to hire directly in their group, I was their top choice. I had already networked with them and met them several times, and was able to get the job that way.
Anything particular that you like to see on someone's resume, someone's CV, that when you see that you're like, oh, that person looks good, or maybe a red flag, something that when you see you're like, no, I don't want to interview.
The red flags are actually easier. It's easy to kill individuals from a stack of resumes. If I see they've had multiple jobs in a short amount of time, that's a red flag. What I'm looking for is a well-rounded individual who's demonstrated that they want to do this job. So if I'm hiring experience, that they've worked at a comparable firm and they have a track record at that firm. And typically, I'm looking for, at least when I'm hiring, I'm looking for people who worked at reputable firms that I know where I can easily do a reference check on that individual. Or that they've been involved in positions that they can talk about. When I was interviewing for banking, like I talked about earlier, well-rounded individuals that have a demonstrated track record of showing through internships that they want to do this job. And if I'm interviewing someone and they haven't read my book, that's a red flag.
No.
So typically they know who they're meeting with, they've done work on me and the firm. And in every meeting, that's good advice for every meeting. Go in prepared. Know who you're talking to. That kind of rational actor's assessment. What is this person likely to ask me? What are they likely to focus on? That's how you prepare for an interview. What firm are you working at? Are you looking to work at? Simple question: what's the market cap? Right. When I was interviewing individuals, what's the market cap? What's the market cap of my firm? Don't know it? Okay. So, yeah.
Did you, sorry, this is a spontaneous question. Did you have a situation when someone said, I read your book, and then after interviewing him or her, you figured out that actually he didn't? Or
No, never had that before. Never had that before.
Hopefully you will not. So, okay. Maybe you can think of 3 qualities that are important to succeed in investment banking, and maybe you can also say stuff if you want to differentiate.
Sure.
I don't know how you feel about that.
Well, I think first is attitude. We talked about that before, and the the will-do part of it. That's just important. Coming in every day, knowing you're going to work hard, and that you're working for people, whether it's you're working for a senior individual or you're working for a client. Resourcefulness, the ability to gather information and process it and just get things done. So investment banking many times, especially in a live deal, is a task-oriented business. You have to get things done. You're preparing presentations and models and scripts and you name it. You have to get things done. Let me think of one that's less serious.
Sense of humor.
Yeah, I guess sense of humor is important. Yeah, like that fifth part of the interview is just being able to get along with people. I think that's very, very important. Just being someone who's fun to be around, that you enjoy being around.
Maybe if I say it this way, when you see some people progress faster in their career than others, what are those things that they have that those who, just average people don't have?
I've seen it. My co-author is one of those individuals who's came into investment banking a little later in life than what is typical, he's an individual who travels every single day. He made managing director very, very quickly. He started in banking in his, maybe he was 31 or 32. I started when I was 22. So he had a whole career before he started in banking. Special individual. I talked about meeting people in this business that deserve to be who they are. And for this individual, for my co-author Josh Rosenbaum, he went to Harvard undergrad. He went to HBS, and he was a Baker Scholar. Worked at the World Bank before HBS. He's an individual who's never going to take a test he's not going to ace. It's one of the reasons why I selected him to be my co-author. He is always going to be successful no matter what he does. And now he's the head of the industrials group at his investment bank at RBC. So he's had a very quick path to where he is. He works extremely hard. He's on the road every single week. So I've seen what he's been able to do. I've seen other individuals that are just self-starters, or they're just naturally smart, very resourceful, and they just think outside the box, and they can get things done, and they become very, very successful very quickly.
Even if they haven't graduated from the top 5 schools.
Well, right? I did not. I went to Indiana University, and it's become a target school, and they have an outstanding finance program. It's a top 10 undergraduate finance program. Look, where you go to school only gets you, in the door. Once you're there, you have to perform. No one ever asked me, and I'm in a meeting with a CEO, or if I'm, picking a stock. Once you're there, no one asks you where you went to school. That's it. You go to school, you learn what you learn. That's it.
I know.
Right?
I did my undergrad in Ukraine, and probably 99.9% of people in the US have never heard of that school. So, but yeah, your productivity tips. Something that your own productivity tips that you allow to be more efficient and productive.
Yes, I have some very good tips. They're not mine. My father's in construction, so in summers in high school I worked as a construction worker. And there were 2 sayings that I learned. There's nothing to it but to do it. I remember one circumstance I had to shovel a pile of rocks to fill up the gap between the earth and a basement. And there was a big pile of rocks, and me and another individual, one of the laborers, we had to fill up this gap. And there's going to be hours of shoveling. He said, nothing to it but to do it. So every task, it's a daunting task. There's so many steps involved. Nothing to it but to do it. And then another tip I got from a cabinet maker, he said, if you sit down, you slow down. So if you stop what you're doing, you take a break, and that's fine, etc. But don't take a break for too long. When you sit down, you slow down. So if you get distracted, you go do something else. It's very hard to come back to what you were doing before.
Any tip for like daily routine that you are using to be more efficient?
Yeah, let me think about that. I don't know. I think just all of us, we usually fall into a routine. You have a routine in the morning of everything you do and to get ready for work, and then when you come home, you have a routine. I would just say don't develop bad habits. Don't waste time. When it comes to work, it's okay to come home and watch Netflix. I'm watching Fauda right now and Stiesel. Those are great shows on Netflix. But don't waste time.
What is typical advancement potential and typical path in investment banking?
So in the banking world, it's pretty set. You have different levels, and there's a certain path that you can proceed down. So if you come out of undergrad, you start as an analyst. So start as an analyst, and then if you come from an MBA program, you start as an associate, or you can get promoted from an analyst level to associate. And then depending on the firm, the titles vary, but generally it's VP, senior VP, or executive director, and then managing director, and then beyond managing director, you can be a group head, or you can run an investment banking division, or you can run the whole entire investment bank.
And what changes in terms of the scope of what one does from
right.
the first step?
So typically at the analyst and associate level, you're doing a lot of the modeling, you're putting together the presentations, a lot of the analysis, you're putting together the pitch books. When you get to the vice president level, you're overseeing the analysts and associates. You start to generate business on your own, or really be the deal captain, leading the deal through the process. Once you get to the more senior levels, you have revenue responsibilities where you're bringing in the deals. And then you get more management responsibilities. You're running a bigger team, or running a group, or running a bank. I would think about it, kind of in terms of the military, where you have a hierarchy and certain responsibilities. And as you progress, you get a higher ranking. And it's possible to get promoted without having to go to business school, at least in the banking environment, or maybe skip a year or two if you're special.
In terms of hours of work, is there same work-life balance maintaining? Is it, because I've heard in the beginning
right.
It's super hard with work-life balance, but it might get easier after a couple of years.
Well, there's a learning curve, right? So a third-year analyst or a second-year analyst is going to be better than a first-year analyst, and an analyst who's promoted to associate is going to be better than even probably a second or third year associate who came from the MBA program. So the more you do something, the better you get at it. So the good thing about banking, it's changed over time. There's a better work-life balance. But if you get those, 10,000 hours in 2 to 3 years, you're going to become an expert very quickly.
And when you're expert, I guess you just do things faster, and that's
you do things faster, and you can, take a step back and think about things more logically.
How common is it to switch from another type of job to your job? I don't know how to, from
right.
investment, but maybe now you can talk about, I don't know, is it in investment banking, is it very easy? Do you know many people who switched from something different to investment
Yeah,
banking?
so I have a lot of friends who I started with in investment banking who still work in investment banking. A lot of individuals going to investment banking because it is an avenue to do something else. You learn a lot of skills up front. So even going to a startup, I know a lot of individuals who started in banking, started their own businesses, or went to startups. Investment banking is typically a path to private equity or the hedge fund world, or to go to an MBA program. So most individuals that I work with, here or elsewhere, have worked on Wall Street at one of the banks at one point in time, either in banking or equity research or some other area, or trading.
So you said about I'm asking whether individuals from different types of jobs come to your job, maybe from, I don't know, chemistry or math?
Generally no. At least in what I do, fundamental based investing. Typically come with the background already knowing what they're doing. Maybe at some other firms, they may hire who focuses on a certain sector. They might hire someone with a technology background if they do technology investing, or with a consulting background. And look, a lot of mathematicians and PhDs do go into quantitative investing. But in general, in what I do, fundamentals-based long-short equity investing, individuals we hire either come from the research or banking world or come from other hedge funds.
Can you think of 3 things that you love the most about your job?
What I like the most and what really gets me going is, finding a new position that really hasn't been discovered yet by the broader market. I got involved in Charter in 2011, and then the Liberty Empire, John Malone and Greg Maffei, they got involved in 2013. So, finding that stock 2 years ahead of some of the greatest investors in the TMT world is very exciting. Getting involved in SiriusXM before Berkshire Hathaway, that's exciting. So, little old me finding, coming from Cleveland, Ohio, and now working on Wall Street and competing against some of the best investors in the world with the best track records in the world. And when you can find a position ahead of the market and then you see the best investors in the world come in behind you, that's exciting. I enjoy meeting the management teams. It's really interesting sitting across the table from a great CEO, hearing how they operate their business and hearing their plan, and then over time seeing that come to fruition. That's exciting. And then we see, what would be a third thing I like about my job?
Maybe about the second thing, can you maybe, to get this feeling of excitement, can you maybe, you don't have to say names, but maybe some example of like hearing that about that, that person was talking about doing this in the future, and then that happened, and I had this awesome feeling that I was a part of hearing about those plans or something.
Well, yeah, I would use Tom Rutledge again from Charter, where he laid out this plan to improve the quality of their network, to go what they call all digital, to eliminate his analog signals, go all digital, and increase his broadband speeds. And to spend a lot of money to do that. So in the near term, there was not a lot of free cash flow, but you had to believe in the exit opportunity. And ultimately, when he fixed Charter to then go and buy Time Warner Cable and Bright House, then be part of that part of the opportunity. For what I modeled is up to 50% accretion in free cash flow per share, and just see the company completely revalue. And then to ask him, why, when he joined Charter originally, did he take options up to 150? So when he joined, the stock was 55. He had options up to $150. And he said, why did you structure the deal like this? Well, because I think the stock's going to triple. You have to be passionate about what you're doing. If you're going into a particular field for the wrong reason, you're not going to be successful. So whatever it is, if you're into cars and you want to go work at a car manufacturer, you're going to be successful. If you're into, and maybe you have some startup and autonomous or whatever you're passionate about, you're going to be successful in, and you're going to make a lot of money in ultimately, and you're going to be happy. So that's it. So if your only goal is to make money, and it's well publicized that people on Wall Street have the ability to make a nice living, if that's your only goal, then you're not going to be happy. Because it is a hard job. There's a lot of sacrifice involved. So you just have to be passionate about whatever you're doing.
Yeah. So the only task is to find out what you're passionate about.
Exactly. It takes time. It takes a lot of time.
You partially mentioned that, but about self-employment opportunities in your field, what is it like? After how many years you see people start their own funds or businesses, and how common it is, and what are the major challenges maybe?
It depends. So I have a lot of peers who have done it. Most of my friends or my peers who have done it very successfully. I mean, they've had successful launches and raised a significant amount of capital. It's becoming harder nowadays to do it. There's a lot more regulatory scrutiny, a lot more startup costs involved in doing it. So typically, if you've been successful at a certain firm and you think you have the ability to go do it, you try to go do it. What's happening a lot now is a lot of the portfolio manager level individuals are going to the multi-managers the so-called pod shops to run businesses there. But yeah, over the past few years, I've seen a lot of my peers go start their own hedge funds and do it successfully.
What are the major challenges that they face?
I think one is raising enough capital to be able to fund the business and attract the right amount of the proper talent. I think the other thing is to come out of the gate with great performance right away to keep that capital in place. Those are the two major challenges: is raising the money and then delivering the performance.
I guess a lot of luck involved into this beginning.
There can be, yeah. There can be a lot of luck.
So you observe those individuals who succeed, but what about those who fail? And what are those mistakes that they do that make them either...
Those who have started their own funds?
No. Just those who do investment banking.
Yeah. Well, I think a lot of it is the opposite of what I was talking about, is having a poor attitude. Look, people do get burned out in this business. It's not human nature to keep working so hard for so long. And look, people have other interests, or they want a different pace of life or a different lifestyle. I've certainly thought about it a lot. Do I stay in this business or just go do something else? You'll have those thoughts. So what's most important is just to be happy. So I've never seen anybody really fail. I've seen them seek to do something else.
Yeah, I guess the largest mistake is feeling that you are completely unhappy and this is not your thing, you're not passionate about it, and keep doing that because of maybe being scared to change things. Or maybe
that could be. That could be. But look, my advice there is, look, you have one life, and you have to enjoy what you're doing. Otherwise, what are you doing here? Right?
That's almost like killing yourself earlier than it is. Okay, talking about a hedge fund industry and investment banking. Sorry, I just feel because
no problem.
What developments on the horizon could affect future opportunities?
Right. Well, for me, all the developments out there are, for the most part, are negative, meaning that there are machines that are trying to replace what I'm doing. And just the availability of information, just with the proliferation of the internet, has eliminated, in many circumstances, the ability to find a stock that no one really knows about. So, but the good news is that it's leveled the playing field. Like I said before, anybody can really do this. So, flashback 25 or 30 years ago, when many of the well-known investors who are talked about at different conferences and who are in the Wall Street Journal or whatever periodical constantly, they were operating in a much less competitive environment. So there's more hedge funds now, a lot more investors. The availability of information, simply because of fair disclosure SEC requirements, it really is a level playing field right now, and that makes it harder to invest and be differentiated. So
I have a financing question. Do you think markets became more efficient because of that? Like prices are more efficient? Or?
I debate. That's the typical professor debate. Yeah. Look, if markets were completely efficient, then I couldn't find stocks that have gone up fivefold in 5 years, that have doubled in 3 years. But the markets are very good about processing information very quickly. What they're not good at is thinking about the next 3 to 4 years. And they're not good at finding those asymmetric situations. So if there's a data point that comes out and do earnings go up or down as a result, they're good about that. If there's a long-term investment thesis that's driven by a new CEO who is coming from a similar business where that individual did the same thing before and is now doing it again, or where there's a very complex balance sheet restructuring, most people don't have the expertise to do that. Machines definitely can't do that. So from that perspective, markets are not efficient.
I see. So if I were to phrase a question, it's because of my own interest in this, market efficiency. But if there is some, fundamental price and the price that we see on the market? And is it now more close, that price that we see on the market, to the fundamental price, or further away, or it's about the same?
Oh, I'm sorry, rephrase the question.
Yeah. So I mean, it's not like but if you expect that the price will go up in the future because of some things, factors you observe, and it means that it doesn't go up already now. It will,
exactly.
Yeah.
So let's say here we are right now, and I have a stock that's trading at $20 and they're earning $1 per share, so trading at 20 times. Okay, and so the stock price is 20, but I think the stock price is 40. And how is it going to get there? Because I think that say the multiple is going to stay flat at 20, and I think the stock is going to earn $2 per share in the next 3 years or so. And if that multiple stays at 20 and $2, I get to $40. Okay, but along the way, there's a lot of things that have to happen, and so that gets discounted. One, there's just the time value of money, and then what is the probability or what has to happen for that company to meet those earnings expectations? So in some cases, some of that stuff is priced in, and your job as a professional money manager is to figure that out. In some cases, I may have a stock that's say trading at 15 times earnings or free cash flow, and I think it should trade at 20 times or even higher multiple. And so what is going to happen for the market to recognize that and for a revaluation to occur? And so from that perspective, so what has to happen? Well, the company has to prove that they can grow at this revenue rate, or if they prove that they can get to this margin level, or if they prove that they're going to deploy their capital in a certain manner that the market is anticipating, or that maybe they're not anticipating, but me as an investor believe should happen. So
would you say that you know some additional insights of what is likely to happen in the future, that you know that, or you get a better feelings about that than average person?
Well, I'll give you an example. So, I spent years as an investment banker. So I look at certain situations and I say to myself, how would I as an investment banker advise this company? Or what is likely to happen? I mean, still am involved in a situation where a power business was restructured. And if you looked on Bloomberg, they had $20 billion of debt, speaking in rough terms, $20 billion of debt, and $3 billion of EBITDA. So it looks like they're 6.7 times leverage in what's considered a cyclical sector. So the average individual typically doesn't understand balance sheets, and computers definitely don't. What I, as a former leveraged finance banker, understand is that, well, in this scenario, okay, I've got $20 billion of debt, about $3 billion of EBITDA. I think there's a balance sheet restructuring event here because there's an activist that got involved in the stock. So I start to look at the credit agreements and the indentures of these different securities. And I see, okay, this one subsidiary has no guarantees. I mean, a little technical, but this one subsidiary doesn't guarantee some of the debt. And that debt is boxed off with this one subsidiary, so what would I do? And the subsidiary is loss-making. So what would I do? Well, I would try to put the subsidiary into bankruptcy and negotiate with the creditors to have this debt go away while maintaining as much EBITDA at the parent as I can. And so in that scenario, I put on my leveraged finance hat and I say, what is likely to occur and how would I advise the company? And so most people can't do that. Or if I'm involved in an M&A scenario, which I have been, and I see a stock get taken out for a certain price, but only trades within, say, 85% of that takeout price, and why, and how long? It's typically because there's a long approval process, and it's going to trade at a discount until that happens. And so, in one scenario in particular, I bought a stock, Time Warner Inc. in February 2016. I had been tracking this stock for years. It had received a buyout offer, or I think it was a rumored buyout offer, maybe it became public, from Fox at $90 per share roughly, 18 months prior. And here the stock's now trading at $60 per share. And but Fox wanted to offer $90 18 months prior. Okay, and I have the view that they're going to earn $6 The following years was trading at 10 times. This should be at a market multiple of the stock. And I have a view that because they own CNN and they own the Warner Brothers studio and have long-term contracts on a lot of sports rights, that they're strategic to somebody else. I didn't expect AT&T to come in and buy them, but AT&T came in and bought them at 107.50. Stock trades to 100, starts to trade up a little more. The deal wasn't going to close for a year. I sold out at 102, 103 because I didn't want to wait another year to get to that 107.50 and take the risk of owning AT&T stock along the way. So you only get that insight and knowledge from being a professional investor, having worked in M&A or investment banking. So most individuals don't have that skill set, but they can pick stocks. They can find stocks that have a fundamental thesis and invest behind them.
So you would say your ability to see things is thanks to your investment banking experience?
I think, yeah, for sure. Yes, having spent 8 years in investment banking, having a credit background as a lens to analyze equities is a huge advantage.
Mm. And understanding very well how company operates and mergers and acquisitions aspects. Yeah, that is very cool. Very, very cool. Okay, that makes me think about something, but okay. Who or what are you grateful the most in your career, and what for?
Who am I most grateful for? Well, look, I'd say just in general, my grandfather and my grandmother on my father's side were Holocaust survivors. I dedicate my book to my grandfather. I say to my grandfather, Joseph Pearl, a Holocaust survivor who taught me the value or the ability to persevere and succeed. Just that, I think having him as a mentor and a patriarch was very, very helpful to me growing up. Knowing what he went through, and if I have to work a late night or whatever, it's not a big deal. I think along the way I had very, very strong mentors. Mark Adler, I hope he sees this, really got me my first job on Wall Street, or my first summer internships that led to my job. He's an investment banker, a public finance banker from back in the Drexel days. One of the nicest guys in the world. Tom Cole and James Paris who were my mentors at Deutsche Bank. Mitch Julis from Canyon Partners is one of my testimonials on my book as a mentor. Runs Canyon Partners, a $20 billion credit hedge fund. Jeff Schachter, who runs another fund called Crawford Lake, very, very close friend and mentor of mine. So it's very, very important to have mentors throughout your career.
When did you realize that you would like to be in investment banking? I guess it's when you took this course, right?
Right.
Maybe you can just shortly talk about that. And how old were you? How
Sure.
did that happen? How did you feel? And like, what was that moment that you're like, wow,
Sure.
I'm so interested in that?
So I was working at Merrill Lynch in a branch office during my senior year. I had been working with a group of friends at a grocery store. They were baggers making great tips. I was in the dairy section. That lasted about 2 weeks. I realized that I should be doing something that will help me in my career, and I wanted to be an investor, so I figured I'm going to work at a branch office at one of the local brokerage firms. And so, I had exposure to the research reports, I had exposure to IPOs and M&A, and I knew there was somebody behind the scenes that were advising the company. I didn't know who those individuals were. Not until I got to Indiana and I took my Business 101 class, an Indiana alumnus came back to speak to us, and he was an investment banker. He was talking about what he was doing, the modeling he was doing, working on these transactions with the management teams of these companies, and then I knew that's what I wanted to do. I also knew it was very, very difficult to get a job in investment banking, and I liked that challenge that I was going to be competing with some of the smartest and best individuals for the same jobs. And so that was appealing to me.
So when that alumni person was talking, you got a feeling that this is who is behind the scenes? Or
Right.
that you were thinking,
Right.
who is behind the scenes?
Exactly.
And like, this is who
I didn't
is
know what
the-
they were. Then I realized that they were investment bankers.
And why was it so important for you to also be behind the scenes? Did you feel like this is like gives you the best perspective about things, or like what was that?
The more I learned about it, just the deal processes, the fast-paced nature of M&A and how the deals come together, and working with sponsors. I'd read a lot of the books about the heydays of LBOs. Just was interested in it and wanted to do it.
What was an attitude of your family and friends when you told them that you want to do investment banking?
They didn't really know what it was. They knew it was hard to get into, and they basically said, don't get disappointed if you're not going to get a job. That was it. Mm-hmm. I think I said earlier, my family, my parents always instilled the values of hard work, and then to basically do whatever I want, but never pushed me to do anything. Never pushed me to study. Didn't study a lot, especially in high school. When I got to college, I studied a lot, but in high school, I really did my own thing, and they were never on my case. That was a good thing. Let me explore and figure out kind of what I wanted to do. Never really gave me any guidance. I had a role model as a father who was who still is a successful home builder, so I could see the value of hard work. They wanted me to be happy, so do whatever you want to do.
So you could just shortly, how did you get your first job and what you were asked at the interview? I guess you mentioned that you contacted those people.
Right. So I was fortunate to start my investment banking career at a regional firm, middle market firm called A.G. Edwards. But I really wanted to be, call it the epicenter of finance in New York and one of the bulge bracket firms. So I had a summer internship in trading at UBS in 2002, which is actually how I met my co-author. He was a new investment banking associate at UBS. And that summer I networked with all the Indiana alumni that I found in the database. So if you worked in investment banking and went to Indiana, then you got an email from me that summer. And whoever wanted to meet with me, I would meet with them. And Tom Cole, who now runs Citigroup's leveraged finance investment banking business and ran Deutsche Bank's business at the time, emailed him throughout the summer. One night I get a call from him. I'm still in the office around 6 or 7 o'clock. If you want to come see me, I'm here right now. I went to go see him. Ultimately, like I said earlier, when he was hiring for his group directly, I got the job.
So when you asked them to meet, what were the major questions that you asked them?
What did I ask them? I really don't quite remember, but what I would ask someone is to tell them about the deals that they're working on. People like to talk about themselves, right? So even in the interview process, if you know the deals that the firm is working on and you say, I read about this deal, you're likely to come across someone in the interview process, if you get advanced in the interview process, that had worked in that deal, and then they start talking about the deal, and you can ask them more questions about that. The throwaway question is ask about firm culture, but that doesn't really differentiate. And if they work in a particular sector, hopefully you're well read, and if they're working in software, you know something about software. You can talk about software. And knowing who you're going to meet with before is very, very important if you can figure that out and know who they are and what product group or in what industry group they work in, and ask informed and intelligent questions. If there's something going on in the firm that's in the news, know about that.
Were you nervous for those meetings?
Sure I was, yeah, absolutely. Because those interviews really determine the starting point in your life and sometimes the rest of your life. So they're very important. And that's why I'm not nervous for what I do today, but I was very nervous studying for tests. I used to study very, very hard for tests in college.
What test was the most?
Any test. Any test. Mm-hmm. Any exam that in college, the exams tend to have, versus high school, a very large weighting on your grades. So there was always a joke. My last name is Pearl. Where's Pearl on a Saturday night? He's in the library.
And the reason was you understood how important it would be for your final grade, like final average
exactly.
GPA, and that is important to get a job, and you wanted to get this perfect great job, and you understood.
So it's all important. It's all important.
If you could start over your career again, would there be one thing that you would do differently?
Yes, I would. I'd buy all the FANG stocks, all of them. So I would, if I could go back in time to start my career all over again or do anything differently, I would save as much money as I could and invest it all in FANG stocks. That's what I would have done.
FANG stocks?
Yeah, like Facebook, Amazon, Netflix, Google, Alphabet, all those. But what would I do differently? So, look, I like where I'm at, where I am, and if I had done anything differently, I wouldn't have the same children I have today. But if I could have the same children that I have today, and have the same marriage and everything else, what would I do differently? I had an opportunity to go work in Japan early in my career, and I didn't do that. I probably would have done that. I didn't get my MBA. I was writing a book at the time. Maybe I would have gotten my MBA. I have peers who've gotten their CFAs. Maybe I would have got a CFA. So, look, my goal was to be a professional money manager, and I got there. Maybe I could have left banking and done it quicker. But it's not really much I would have changed.
Do you have any downtimes in your career, and if so, how did you deal with them?
Yeah, so I mean, just in terms of general my career.
Yeah, it may be like the time that you felt less excited about that, and maybe like that's what you inspired to switch from investment banking to, I don't know, or where the...
I have a better question. Maybe ask what prompted my career change.
Yeah, okay. Yeah. What prompted your... Okay, I don't want to... Yeah, we don't have to call it down, but yeah, what prompted your career change?
Sure. So, like I said, I've been working in investment banking for 8 years and enjoying what I was doing. And, once you reach a certain level, I reached the VP/director level in leveraged finance, the job really doesn't change that much. And I felt that I kind of stopped learning, and always had the desire to go to the buy side and be an investor. And so at the time I was in my later 20s, 20 or 29, and I kind of had to make the move then, or it really wouldn't happen. So I decided, I remember where I was. I was with my family. Our family dog had just passed away, so we took a family vacation to Arizona. And we're at a ranch called Tanca Verde Ranch, which is one of my favorite places to go in the world. And hopefully they send me on a free trip there if they see this. And at that point, I really decided I'm going to make a career change. Now is the time to do it. Mm-hmm. So a small life event. The family dog died. So I figured now it's time.
What are your professional plans for the next couple of years?
Ooh, I can't say. I can't. I have ideas like everyone does, and everyone has dreams and everything like that. But you'll know when you see them.
Hopefully, a book about stock picking.
We will see.
Work-life balance. How do you partially said that you always try to make time for family,
right?
But your hobbies, you also have hobbies. So like work.
Yeah,
hobbies.
I have too many hobbies. I like to cycle. I like to ride my bike, and I do these tours. My brother, who lives in Cleveland, will come to New York, and we'll do some of these tours. I've picked up golf, but I've been playing not frequently, but I've been picking up the last 5 years. And I like to skate with my son. I used to play ice hockey. There's no time for that now, so I'm teaching my son how to skate. He's 5 years old. So those are my hobbies. And then just spending time with the family. And my wife and I found a few shows on Netflix that we like to watch, so that's about it.
Do you travel a lot, like unrelated to...
Yeah, I should. Work? I don't. I should. Earlier, I've been to Europe, I've been to Israel. I have not, and on my honeymoon I went to Greece and Italy, but I haven't traveled too much. When you have small children, we go to Florida, we go to Arizona, but I haven't traveled internationally, at least with the children. I've done it for business a lot, but not yet.
Do you have any tip? Maybe you see other people in investment banking whose work-life balance is not that great. Do you have any tip for them to inspire them to have...
I don't know. It's tough. That's a tough one. My work-life balance is not great still. So, look, you just have to make time. There's 24 hours in a day. You just have to make time. I made enough time to have a family, and now here we are at, what time is it? 8. Yeah. It's 9 o'clock at night, and so I'm taking time. You set priorities. This will help students. This will help sell my book. So this is you make time for everything.
What's the best advice you've ever received?
I don't know. Let me think. Mitch Julis from Canyon gave me this advice just about the hedge fund world and knowing what I was getting into, about when success occurs, and it really occurs, only in this business at least, 1 out of 4 scenarios. If you're at a fund and you do well, but the fund's not doing well, you won't have a good year. If the fund does well and you don't do well, you won't have a good year. If you don't do well and the fund doesn't do well, you won't have a good year. But if you do well and the fund does well, then you'll have a good year. So, and that's been true. Really, 1 out of every 4 years, I'll have a good year.
So advice is just to be aware of it?
Yeah, just to be aware and just to know what you're getting into.
So it's okay, to have 3 years in a row, maybe.
Yeah, you could have 3 meager years and one healthy year. Mm-hmm. Or it could be 4 meager years. Mm-hmm. Or you could have 4 healthy years. Mm-hmm. But to know what you're getting into, and know those are the scenarios. Those are the quadrants that you're going to be facing.
Any world problem that might be related to what you do, might be unrelated to what you do, that you wish you could solve?
It's funny you mentioned that, because I was thinking about something similar previously. So, what would I change? It really is impossible to change. Like, I was thinking, I forget which. I was watching some movie with my son, some superhero movie, like Superman or something. And if you had all those powers, if you were Superman, what would you do? Nothing would really matter. Money wouldn't matter, right? Because you have a higher calling. So, I guess what would I change? I don't know what I would change, but if I had a different mind, or if I had a different goal, or had the ability to really affect the course of human nature or the world, then I would do something differently, or I would try to do that if I had the ability to do that. But what would I change? Look, I think what happens if there were no wars? What would it take to get there? And it's just not realistic, right? Or how do you change the climate? There's certain things you can do, to make sure you have a lower carbon footprint, etc. But what would I change in general? I don't know. Not that much in my control that I can change. What I do change, or my impact in the world, I would say, beyond delivering returns to our investors, is I think I've gotten a lot of people their dream jobs. So I've educated a lot of people. I speak frequently. What I have the ability to, I think, inspire people, help them think about their career path and how to get there, and then help train them. So I think that's probably my impact on the world, versus I think change. I don't know what I can really change, but that's what I can do. That's my skill set.
Your favorite food?
My favorite food, anything that my mother makes. She's an outstanding chef, I should say.
What's her number top two?
I like her spinach quiche with mushrooms and full fat cheese, not the non-fat cheese, and her spaghetti and meatballs.
Favorite thing to do in your free time?
Hang out with my kids.
And any favorite activity to do with them?
I do enjoy taking my son skating, and I do enjoy taking my daughter on her scooter. She's getting really good at it. She's 2 years old.
Favorite country to visit?
Favorite country? I really like the UK. I like Britain.
Any reason why?
I go there every year to speak. I always have a great time. I like the culture. I like the people there. I just have a good time there.
One thing that you cannot live without?
Internet.
Your favorite book?
My favorite book. I like Margin of Safety by Seth Klarman. It's an outstanding book. It's been an inspiration to me. It's out of print. To buy a copy costs anywhere from $1,000 to $2,000 on Amazon. I actually own a copy that he signed for me. So, actually, he was the honoree at a gala event from a nonprofit that my wife runs, and he was the honoree, and so I got to meet him there. And my wife goes up to him and says, "My husband is a huge fan of your book, and he loves it. Inspired him to write his own book." And he said, "Great. Well, have him send me a copy. And the book was out of print, and so I had a PDF copy of it, but not a print copy of it. It cost $2,000, and so I went and bought a book and sent it to him, and he signed it.
By post, via mail.
Yes, I mailed it to him.
Wow. Did you include the prepaid,
Probably. I sent him a copy of my book as well. I think I probably included a prepaid envelope.
Did he write some text to you?
He did say something. I don't remember what it was, but it was something personal. But it was expensive. It was an expensive value proposition. That was an expensive conversation my wife had with him.
Your favorite show or movie?
Favorite show? Well, I would have said Game of Thrones, except for season 8. But I still think that's my favorite show.
What makes you sad?
When my children are sad.
What makes you happy?
Same thing when my children are happy, or when we have a very big sales month. We get our monthly sales for the books. Or when I pick a stock that goes up a lot.
Can you finish the sentence? You should get into my profession. I'm not sure. You should get into either investment banking or stock picking for a hedge fund. If you are,
I think if you're passionate about the markets, you really have to be passionate about this. You have to have patience. It's kind of like being a detective, where you have an idea and then you have to go step by step research it and then come to a conclusion. And that's either to buy the stock, or to wait, or maybe even to short the stock.
You should not get into my profession if you are.
Well, I think the opposite. If you really don't have the ability or a desire to follow the markets on a daily basis, I think if you don't want to be, I'd say, focused on the news every single day and what's happening to your positions, you can have a very successful career in this business, or you may not have as successful of a career. But if you're only going to this career path for monetary gains, just to make money, you're unlikely to be very successful.
How important is corporate culture for a job?
It's very, very important. I'd say it's the most important thing. So as Howard Marks likes to say, it's the most important thing. And in M&A, culture is the intangible that I don't think a lot of people realize is a key ingredient to making M&A work. So if you don't have a good corporate culture, if it's dysfunctional, nothing works. In an investment bank, you see a lot of attrition. You see deals not get executed correctly or as efficiently. And in stock picking, you don't see good decisions made. So corporate culture is extremely important. It is the most important thing.
So it's important for a young person to figure out that as early as possible and to see whether it's good fit for him or
right.
for the future. Okay, and the last thing you would have to do, just look in here, not at me, and you can say whatever you think that you missed out that you would like to share with the world.
Sure.
Or something inspiring message for young people that you have. Can be also related to your
Sure.
book, can be to your career, and you can just.
I think in order to be successful, you really have to focus on what you're passionate about. So take the time to think about what you want to do for the rest of your life, what you're interested in doing. And if you can find a career that focuses on what you enjoy doing as a hobby or in your personal life, I think you're going to find you're going to be very, very successful.
Cool.
All right.
Thank you so much for taking so much time.
Absolutely. My pleasure.